In the world of finance, there is a fundamental law that isn't supposed to be broken. It's the economic equivalent of gravity. Usually, when the US dollar goes up, gold goes down. They are rivals. One is the king of the current system, the other is the insurance policy for when that system fails. But right now, something is broken. Both are surging at the same time. And if you think that's just a weird market quirk, you're missing the signal. When the king and the insurance policy both start sprinting for the exits, it means the house is already on fire. For decades, the dollar was the world's safe haven. If there was trouble, you bought greenbacks. Gold was for the doomsday preppers and the skeptics. They lived in different neighborhoods. But today, they're sharing the same bunker. Here is the hidden mechanism. We are witnessing a two-front panic. On one front, you have the geopolitical reality. As tensions between major powers escalate and trade routes like the Strait of Hormuz become combat zones, the world's central banks are quietly having an identity crisis. They need dollars to pay for oil and debt, but they no longer trust the dollar as a long-term storage unit. So they're buying gold at record rates, not because they want to, but because they're terrified of being debanked by a political whim. On the other front, there's the math of the U.S. debt. The U.S. is currently adding $1 trillion to its debt every 100 days. To any rational observer, that's a slow-motion car crash. Yet because every other currency looks even worse, the dollar stays strong by default. It's the cleanest dirty shirt in the laundry. The absurdity is peak 2026. The dollar is rising because there is no alternative, and gold is rising because everyone is desperately looking for one. The hype tells you the economy is resilient. The charts tell a different story. When these two assets spike together, it's the market's way of screaming that the risk-free rate is no longer risk-free. We've reached a point where the people running the global economy are hedging against themselves. This isn't just a numbers-go-up moment for your portfolio. It's a transition. We are moving from a world where we argued about how much money to print to a world where we are starting to wonder what money actually is. If the dollar represents the power of the present and gold represents the survival of the past, their simultaneous surge suggests a very uncomfortable future. When the world's reserve currency and the world's oldest store of value start acting like best friends, you have to ask, what do they know that we don't? And more importantly, when the music finally stops, which one will actually be standing?